Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is April 21st, 2020. Today's topic and main story is going to continue to be the same theme that we discussed yesterday. We were discussing very specifically oil. Oil went down below $0 per barrel for the May contract. Today, the contract expires. Remember, oil trades in futures because you can't really take delivery of a barrel of oil. But actually, yesterday there's so much, oversupply of oil with the refineries, storage facilities, pipelines, ocean tankers, that it went beyond zero. Somebody was actually paying somebody else, $38 a barrel to take it off of their hands, and basically saying, listen, there's so much out there, and there was a point in time where the oil markets didn't have one bid. And that's why it fell way below zero, which is a very historic day. We've never seen that before. So it's going to continue to play out. We'll look at the June contracts, but essentially right now, for the consumer, it'd be wonderful that the oil prices or gasoline prices are going down, but we're not driving. And so that's the biggest problem, is that there's a demand destruction, whether it's flying or driving or any other mode of transportation that requires this stuff. So we're seeing this play out real time. The concern would be watching oil spill out into other issues in the economy from a financial standpoint. Markets are obviously, the point number two I wanted to talk about are the trading ranges for the S&P 500. So while oil yesterday and today continues its decline, the S&P 500 is still within a range. So the 2,800, 2,900 range on the top side, which we saw last week, and then it's sort of pulling back to right now we're, for the S&P 500, about mid 2739 as I record this video, mid Tuesday day. And then on the bottom side, the range that we're looking at is around the 2,400 level. So there's a short-term support. So again, remember I had a video about a week and a half ago back talking about the S&P 500 on the top side and then bottom side, and that it's okay and constructive to trade within that range. That's part of the process. And I said that this is, number one, we're going to have a lot of volatility and extended volatility, as we're seeing today and yesterday and a few other things, especially in the commodities market with oil. And that's just part of the process itself of getting through this bear market and going to closer and closer every day towards turning the corner. On the medical side, the final thing I want to talk about is, models have been terrible from the very beginning, continuing to be terrible. That's sort of another prevailing theme from our morning research, at least what Wall Street is looking at. This particular piece that I wanted to point to is the COVID-19 outbreak in Los Angeles County is far more widespread than previously thought, up to about 55 times bigger than the confirmed cases. And this is according to research from USC and the California and LA Department of Public Health. They basically just released this study, and they found that nearly 4.1% of the county's adult population has the antibodies for the coronavirus, estimating between 221,000 to 442,000 of adults in the county have already been infected. What does that mean? Actually, the good news is that there's a high probability that this coronavirus is bigger than everyone thought it was, and that means that more people who have already been infected already had it. And if you add that to the denominator, remember I talked about the numerator, the denominator. The denominator is the number of infections that we have over time. That continues to grow, and that'll continue to grow as we test. Testing is important because you can't manage what you can't measure. That's another important thing. The deaths, that'll continue to go up. That's the numerator, but you divide one into the other, and that takes the overall death rate. And that's what this study is actually pointing to, that the overall death rate, if the virus itself is that much larger and widespread than we originally thought, which ultimately this looks like it's the case, most, if not a lot of people, at least in that study, have been exposed to it. That means the death rate goes down. So statistically speaking, while one life is way too many, and that's not something we want to see from anything, from the flu to COVID-19, that actually puts this into statistical sort of more modeling that we can see that the death rate doesn't go higher, it goes lower. So I think that's important to watch from the headlines that we will key in. I think the markets will will ultimately see through that data. That's a positive, net positive. And again, finally, thoughts and prayers to all those in the medical community. Thank you for all that you do, and stay at home, do your job, and we're getting one day closer to more or less being through this than we are from 3-4 weeks or even 2 months ago. So God bless, and thanks for listening.